Jenny and Craig presented a review of our procurement approach and policy. It'll be in the next term, but that revised policy will come back, and we're addressing exactly that point where, as a council, you're approving projects and within limits, procurement decisions be made within the right governance. And from a governance group point of view, is ensuring that we're following the right approach to procurement, but not necessarily making those lower level procurement decisions. And so setting the right thresholds there, so that'll be part of that discussion. The intention is to bring it back to this group in the first instance before we go to the wider council on it. Yeah. No, what is it?
Right.
Yeah, sorry, second right at the chair. I just concur with that approach, Calvin. I think the crucial bit is then if it's part of a major project that's reported back through the reporting structure and we get to see those, so it's not invisible to us, but I think the appropriate thing is about the delegations and the leeway to operate within that. So I've made some notes and I should have read them before, so apologies. Page 20 in the report talks about fraud risk and what role does, and there's a question there, what role does council play in relation to fraud, etc. And there's a number of those things that I think if you're looking at work program, and Lisa's, sorry, this is preaching to the converted, I'm sure, but as part of the incoming audit committee who will have to deal with the audit itself, probably there's a workshop needed there, because it's really interesting when you're asked those questions on the point. I'm sure you've got it covered, David.
We're already scheduled down to the date, Murray.
Yeah, good on you, David. Well done. Because it is actually, you do have pause to think and you go, well, actually, what do we do in relation to monitoring fraud? You know, when you put on the spot like that, it does actually cause you, I know we're doing something, but when you put on the spot like that, you think for a moment, think, well, hang on, no, look, we've got a fraud policy, we've got a whistleblower policy, we've got, you know, et cetera, but it does, especially if you're new to that process, that's a fairly challenging question to be asked for an incoming audit committee. And then
I might just in reply to that though, I do feel sometimes that it's a bit like the English when they say, well, have a cup of tea or we'll put the jug on.
Yes.
It's like, let's have a workshop.
That's right. It's not, it's actually just
solution to that.
No.
But I think it's a very, very valid comment. And I think what it needs to be identified as one of management's top 10 risks, because fraud risk will always be there. And what we need to do as governors is ask management, what are you doing to prevent, detect and respond to fraud? So, and there'll be a whole activity. There should be an annual program of work which would involve data analytics. It would involve awareness sessions so that, you know, all the kaimahi actually understand what is the type of fraud that we would be susceptible to. And no one likes talking about the F word. When I worked in central government, I wasn't actually allowed to use it. I had to say the F word or make it something else because it was such a contentious issue. But you know, it's very wide in scope, and it can actually be around conflicts of interest, or it doesn't need to be financial. It can be procurement, it can be price fixing, etc. So there's a whole program of work that probably needs to go in place for that. But once we've actually identified the risk and what that risk looks like for this council, so again, I think maybe let's see it as I identified one of the top 10 risks. And then let management tell us how they're going to manage that risk for us. Again, we don't need to jump in there to.
Yeah, I think it's about an awareness for the incoming councillors too. To
I think that's where the workshop would be useful. Would be the awareness session.
Awareness session of it, and you know, from a contractor and ex-rugby player perspective, the F word has completely different connotations. And later on, sorry, clearly that's an auditor's description. So finally, page 21, group audit includes Selwyn District Charitable Trust. So that'll be historic, Kelvin, because we've now taken that out of the audit process. So this will be the final one that's audited under. Is that correct?
This one won't even be audited. I think this is just an oversight from the audit planning.
Yeah, I wondered that.
Cut and paste from last year.
Yeah, I was trying to think when we actually made that determination, and whether
we did that prior to the end of the financial year, which allows us to
That's what I thought. Yeah, thank you. Yeah, so that's a delete.
No, thanks, Rose. Great. So my 5 cents on this is has pretty much all been said, but just so that it's minuted, I guess, from the chair, and it is. I mean, you've got full comprehension of this, Calvin, but it is that wee paragraph, that talks about communication with management and the council. We all meet with management and the council throughout the audit. We will maintain ongoing corrective discussion of an issues to ensure that there are no surprises. So I think, and you will be very proactive in this space when looking back at last year, but it's almost on the first day or the kickoff meeting prior to that audit. And I know I'm telling you how to do your job. But I'd almost want to see that letter that Julian wrote with all the things that he thinks, on both sides, and go, okay, well, how are we going to make sure that these things don't, as much as we can mitigate them, not occur again this year? Because yes, there is environmental or kind of not global stuff going on in the audit industry, but it is getting a lot better. And as a firm in my other hat I wear, we're at full capacity with auditors. We've had 3 South Africans and an Irish and someone from Audit New Zealand come into our firm. So we've got no more opportunities for auditors. So we're humming, the borders are opening, and that will, in the next 6 months, that is going to get better and better and better. So I just want to confirm that Audit New Zealand's resourcing issues don't become our issues, and the cost attributed to that does not become our cost. And I know you just kind of, you're all over that, but let's just make sure that your team, like they will be doing on their side, every time if they turn up to a hui and our staff member's not there, and they've arranged the time, they'll probably write that down and say, well, let's get that on our side and go, well, actually, I've already sent that to you and I've had to send it to you again. So let's just make sure that collaboratively we, and hopefully we don't need to do any of that, because in that kickoff meeting, we will reflect on what didn't work so well last year. And that's enough on that, because we've all said the same things. Hopefully this year will be better. And actually, a sign off in November is not bad. Compared to what a lot of other organisations are going through with June balance date. I know a lot of organisations that it's actually going into the next year, and they're signing off just a month before they commence so actually November's not bad. Yeah.
Just if I keep Murray's line of comment going, in addition, Murray, to those things that you raised, you might be interested to know, we've also pre-prepared information on Privacy Act, the amended Local Government Pecuniary Interest Register Amendment Act, Members Interest Act, Conflict of Interest, Conflict of Duties, Lagoimas, Water Services Bill, Local Government Act, amongst other things. And the one thing we're mindful of is who the audience is. So it's newly electeds plus those who would benefit from a refresher, because it's 3 years since the last time. And secondly, making sure we avoid information overload. So don't sit down, I'm going to take half an hour and tell you all these things. So it's just how we spread those out. So, and the mayor-elect and I will have the responsibility of determining the degrees of that immediately post-election.
You didn't have anything else, Kevin?
No.
Cool. Report.
Okay, so we have the Treasury report for the quarter ended 30 June. Summary on the dashboard. Borrowings dropped, gross borrowings dropped over the period, and you'll remember that we'd pre-funded some refinancing of some borrowings that were rolling off. Cash and deposits and net debt, of course, cash going down, therefore net debt increasing. Undrawn facilities unchanged, and headroom slightly lower, which is the net debt moving down. Current total debt just on a lift up there. Weighted average fixed debt duration down slightly. That's just reflecting timing as debt is rolling off. Term deposits slightly down as we're funding other operating activities there. Moving to the next page, debt position there, you can see the duration of the debt. Not too much movement in that. Interest rate risk management. While we've not drawing down debt, we've still got our swaps in place to keep that cost down, although it is starting to increase, and there's another interest official cash rate announcement today, which they're forecasting a 0.5% lift again. So certainly Treasury are mindful of their role in knocking inflation on the head. So I think we'll see a little bit more of that, but the long-term numbers are still reasonably positive to a longer, lower rate. Cash investments said there's a very little change there. Debtors still progressing in a nice fashion, despite the economy being a little bit tighter and a little bit tougher for people. The environment services one, there's always one that's we talk about, and that's largely relating to resource consents and timing of those, but positively we've trended down in the quarter. That should be the quarter to Q4 there, sorry, it's Q3. And rates still progressing nicely. And then just really, I suppose the key thing here is we look at that 90-day bank bill rate and the OCR, just the rapid increase we're seeing there. But still, we're nowhere near where we were back in, well, getting closer to it, around the 2015, 2016 mark. And we'll see this, once we get inflation under control, that start to fall and plateau again. Happy to take questions.
Any questions?
None?
Yes.
Shane?
Oh, sorry. Thank you. Thanks, Calvin, for your report. Really just quite quickly, the page 36, undrawn facilities, is the undrawn facilities part of a larger, I guess, fund? Does that accumulate interest? It just says here it's sort of on a flat line. The purpose of those undrawn, where do they sit, and what are they generally?
So it's required as part of their financing arrangement and policy to have that there in the event of something catastrophic occurring that we have to draw down quickly on it. So we pay a facility fee on it, and so there's an amount that we pay every quarter on that flows through.
Thank you. And just secondly, although the headroom to limit is down, and we continue to track positively upwards, obviously the continued risk that I hear from our community is back to the unsealed roads, and whilst there is substantial amounts in there, largely a lot of the risk that I'm hearing from our community is around that, our unsealed roads, and obviously those reports have to pass back through council, but explaining this to people out there perhaps watching or taking this information back out there, if they're saying, well, I've got a dirt road here that hasn't seen a spot of metal for X amount of time, how do we advocate for that, and how does that happen when we're looking at perhaps the accounts today to say there are opportunities to do that? But I know we'll hear back from a report from Murray around that, but I guess that's sort of the tension that's out there at the moment.
Yeah, look, we have facilities to borrow, but when you borrow, you have to repay, and you repay through taking more rates on board. So it's a balancing act between what level of rates do the community want to pay, the quality of the roading or the service that we're providing, and so it's getting that balance right. Look, we'd all like better roads, but do we have a community that want to pay more, and we need to assess that through our planning rounds.
Thank you.
Just taking the opportunity to follow on from Shane, and it's probably not the right forum, but with regards to financial investment in our roads, is there a possibility that, given the weather patterns that have happened in the past month, that we actually undertake a campaign of informing our community about the high water table, the impact on the roads, because this could be a phenomenon turning up with climate change, uncertainty of weather events. And I guess, it's important that if this is going forward, we need to do some planning for it.
If I can help the conversation through you, Madam Chair, Deborah, I think it's a question best suited for next week's council meeting, where there is a transport report, but the observation was made before that we can spend a lot more money, but with that spend, rates go up. So where is your balance? And Shane, back to your question around the prioritising of roads, that's what we do at the start of each calendar year when we're looking at the work program that Andrew and associates bring to us in terms of priorities of roads, etc. And the other one is the cost of maintaining unsealed roads versus the cost of maintaining sealed roads. So, but that's all outside the brief of this committee, Madam Chair.
Thank you. Yeah, no such thing as free cash, unfortunately. Even if it's a, it's a healthy looking treasury report.
Right.
So I haven't too much on the report. It's a good looking report. Obviously there's debt that's funding CapEx. Interest rates are getting slightly higher. I did have a question though, Calvin, on again, I might just not be interpreting it properly. It's where the drawn amount looks higher than the limit on so the floating rate notes. Are they just, as a columns, are some of them around the wrong way, or am I just not reading some? So page 3 of the Treasury report, which is intelligent, is so yeah, like floating rate note, drawn amount 10, but then limits 5, and then yeah, and then the top one as well. So sorry, the second line down, floating rate note 10, limit 5, and then about halfway down there's another one.
I'll come back to you on that. Just it may be an error there, but look at that.
Yeah, hopefully not. Yeah.
Yes, there's two.
Yeah,
Two
there's 3
further
or
down.
4 of them. Might just be a transposition error. Hopefully. Hopefully not, I'm sure. Yeah. Nothing more from me. So mover and a seconder for the Treasury report. Thank you, Shane, Sam, all those in favour? Right, moving on to major projects.
Should be the new covers we're using for all these reports.
Yeah.
We've modernised.
I know, they look good, don't they?
Tiara here does.
Yeah.
Good morning. Just before I start the report, just reflecting on what the council has achieved over the past 2.5 to 3 years. We've actually delivered 19 major projects totaling more than $150 million. The top 4 of those projects totals $80 million of the 150, so more than 50% is in 4 projects, which is very good. While these projects that we delivered provided great outcomes for the community, the majority took longest to deliver and exceeded budget. And that was due to, when I analysed the commentaries, we had COVID lockdowns, we had the effect of COVID on the availability of resources, we have supply chain issues, which are all external to the running of the council, but we also had scope changes in a lot of our projects, which occurred after we'd gone to tender, after we actually started construction, and these all had costs which flow through to your timing and into your expenditure. And looking forward, with the exception of the lockdowns, because I think they're a thing of the past, the balance of these risks will affect all of our projects going forward. I don't think we can say that any of these supply chain issues or scope changes will change. We will always have to be flexible. And this year, the LTP is saying that we're going to deliver 14 projects for a total of about $40 million. Most of those projects will be in the design stage. We will be completing about half a dozen projects this year, which have been carried forward from last year. So all in all, it's been a busy 2.5 to 3 years. Just on my the individual projects, the youth park, the construction of the scope is progressing. The contract is forecast to be on time and on budget, contrary to what I've just said in the previous report. Green space, it's in the designs phase. The youth park and the green space are part of the Rolleston Reserve redevelopment. The green space construction is to be phased to minimise disruption to the town centre build, and it's forecasted to be completed on time and on budget, but around about 23, 24. So when we think we'll be finished that. The Rolleston Town Centre infrastructure, roading and car parks, it's substantially complete, just with the exception of some planting, irrigation and lighting. The lighting was not able to be installed pre-June because of supply chain issues. But it's forecast to be completed in August now, and it is actually going to be well under budget. I'm forecasting about 790,000 under budget because we used external resources to cost it, and they've come in well under that. So that's quite a good story. The town square, I missed that one out. It's on hold while the developers complete design and construction of their buildings, and it's now forecast to be completed in November 2023. It's going to be significantly over budget due to scope change since tender acceptance, and that includes the sales and what have you, whether we actually go ahead on some of these things, I don't know. It's still in design phase. Infrastructure for the Prebbleton Reserve Extension Stage 1 is nearing completion. Its delays have been caused by wet weather. It's forecast to be completed by October, and it'll be 8% over budget due to additional work identified during construction. We've got some drainage issues there, some stormwater issues, which we're going to have to redesign. Pines 4, 5 and 60, they're now all being combined into one project called Pines 120. But the early design and manufacture of critical elements was essential for this project, and now delivery is scheduled for August 2022. Heavy July rain has set completion back 1 month to January 2023, but it's expected to be delivered on budget. The Darfield Trunk Sewer, practical completion certificates have been issued for the majority of the pipeline. That's excluding the pump stations. The supply of the wet wells to the pump stations was delayed due to supply and transportation issues. They were coming from overseas, so we just caught up in the whole bottleneck there. The construction of the pump station is expected to commence in August, with Darfield to be operational in November and Kirby operational in December. The Darfield water treatment plant upgrade, commissioning of the plant has been delayed due to COVID-related staff illnesses and weather events. Completion is forecast for this month. The project is expected to be over budget due to the late inclusion of chlorine costs and power upgrade costs. Lastly, Prebbleton Reservoir and Water Treatment Plant. It's in the design phase, and current lead times for material supply pushes out the completion date to November 2023. This project is forecast to be over budget due to the costs of the temporary water treatment plant and its associated connections to Prebbleton were not included in the original estimate. This contract has yet to be put to tender, which further increases the risks of additional costs at this particular time. The current estimate is based on staff evaluations. Any questions?
That's great. Murray?
Yeah, I guess it follows on from our previous discussion on scope changes and the discussion which will happen next triennium. And Craig, and this is not a question we'll answer now. It'll be in the scope of the new committee, but it's clear that we need to have an understanding of that when a scope change happens, who's driven that and what the budgetary implications are for us, and whether, if it's an unbudgeted expense, at what point does this committee and Greater Council. So that whole debate, I think, is quite crucial. Whilst we acknowledge the fact that we shouldn't be interfering at all levels, we have to have set a really clear threshold that says if it's unbudgeted, this has a rating implication, whatever, then I think that is a governance input. So that discussion going forward, and we won't have that debate today because that's for the incoming council, but I think that's something that the Audit and Risk Committee should really have a clear oversight on and recommendation to full council, from my opinion. Thank you.
Ed, and now I'm thinking of looking at Jenny behind you, but yeah, it comes back to that program discipline, doesn't it? And it's not just around scope changes, but it's also around unused contingency. So it's making sure that, and I know that Jenny understands that what good looks like. So it's probably, progress in moving to that. I might jump in because my question actually related to Craig, with regards to the scope and additional scope. Remind me again how what is the actual process if it is substantial? So if we have a baseline budget, because there is one example, the I think the town centre one. So because when you look at the baseline budget and then the estimate budget, it's not a good news story when you look at those two numbers, but then when you read the financial commentary, there's obviously a lot of that relates to additional scope, so if additional scope, then it's additional CapEx. Well, hopefully some of it's actually capital. So it's whether we need to, and understand that kind of links to what Jenny does around program project discipline, is that do we reset our baseline budget if it is agreed additional scope, if it's a small, and what I mean by that, if we decide to use this type of sale rather than that type of sale and there's a difference, it's because we can't get that one because of supply issues, and that's almost unused, that's contingency. But if we decide that, while we're here, we're not going to make this paving 1 kilometre, we're going to make it 2 kilometres, and that's additional scope. There's kind of a difference. So actually, if we've made that decision, or the project team and management and council have made that decision around additional scope, then I'd expect the budget to be changed there, so that when we do the PIR, it's actually a good news story, because even, that difference between 2 mil and 5 mil, when you look at those two numbers, it doesn't look great, but it's actually because we've decided to do additional scope.
We do have an issue with budgets, which when we set a budget, and a lot of projects going forward have been set in the 2031 LTP, which causes me concern because they were already out of date if they've been set 2 years ago.
Yes.
But the process, because we have to report against the LTP for audit purposes, we don't get an opportunity of actually updating the budget within the system. And it's only when you're actually talking to people that you actually find out that there has been a paper gone to council and there's been approval for additional money, but it's not lodged anywhere. It's not actually visible to anyone looking at the system. It's the system, which becomes very hard. And I try to, and when Calvin set up these, we've got a forecast that the forecast figure should include what we think the costs are going to be in relation to the costs that have been approved by council, whether or not it's the budget or it's actually further additional cost. So it's a bit of a juggling act when you're presenting stuff, when I'm mindful of the fact that I'll be asked to report to audit about how the project has gone. But I know that there's been additional papers that have said we need extra funds and it's been approved and what have you, but you have to report against what's in the LTP, which is a bit of an issue, but we get there. Yeah.
But it might be that you can, even in this dashboard, you might be able to reflect, well, this was our baseline budget, but subsequent to that, we've had approved additional budget for this additional scope.
Yes, I'm conscious of the fact that I've only got one slide per to actually use, and I'm looking at taking out maybe the risks and issues for the individual contracts and having a risks and issue slide at the beginning, because all the risks and issues at the moment that we're facing are across all the projects. Whether there's an additional one specific to a project, we can always report on that, but I can actually extend some of these tables to include
Yeah, I'm not even worried about going to another page, because when I started 2 years ago, we had 300 pages. Now we're down to 80. So I give you full allowance to take another page if it's going to add value to the, it's a very good looking page though. It's very concise and it looks great, but I'm only talking about another line, because then it just tells the story a little bit better, that actually it's not as bad as it looks, because if you just look at those two numbers. Anyway, enough from me.
Can I just, this is very linked to the conversation we had earlier around procurement and delegations and what gets approved where. Craig's right that the RTP, which we've crafted and becomes out of date the minute we've signed it off because of various things. The auditors want to see performance against the RTP, which, that's the commitment we've made. But then in the interim, we create annual plans, and that becomes the new number that we should be focused upon for internal looking at things. And then even subsequent to that, there'll be changes in scope, cost escalations, things like that need to be dealt with and approved through a change control process. And so I think that's what you're referring to, Murray, where there is a scope change, there is something we know needs to be, it comes back here, it's approved, it's agreed, we've agreed the funding strategy for it, and we move on, and we're reporting against that. So there's a few things internally that we need to do around how we capture that information, but making sure that, yes, we've approved a envelope of funding through the LTP to do something, that needs to come back and be confirmed as the right price. Has the scope changed? Has it significantly moved in budget requirements that we have to rethink about it? And our neighbours next door with the stadium is a prime example of that, where it's been moving all over the place and has to keep on coming back for discussion.
Thank you. Just with regards to our development contributions, we've got some projects, and I noticed one of them is the water infrastructure at Prebbleton, and it's 100% funded by development contributions. Just with regards to the assessment, I'm trying to understand, is the increase within scope of what was predicted? Or does it come down to the question that some of us have been asking for some time? Are we collecting the appropriate contributions, the level set for the projects?
I would have to defer to the person who calculates the development contribution on that, because I don't know. I look at the funding source as per the GL, and that's the funding source. And when it comes to actually applying the funding, I will actually go and sit with the project manager or the likes of Murray England and say, how is this going to be funded? Because it's way over the costs that you have actually in the LTP. So is it going to be funded entirely, or do we have to put some through the targeted rate?
Yeah,
So
it's just with regards to 1.52 mil was construction costs.
Yeah.
And just looking at those particular variations and how and just making sure that we are collecting the appropriate development contributions for these projects going forward. And if we know that there's going to be an escalation in price, how do we actually cater for that escalation cost to make sure that we're not, we're at least, level with the game, we're not falling backwards.
I agree. Yeah.
There's a few questions in that there, which first of all on this, it's a pure growth project, because why it's 100% funded by DC. So there's existing infrastructure there. This is not about upgrading the infrastructure to get a better result. It's about a growing community. Therefore, it's 100% DC funded. The process for establishing the level of DCs is working through the RTP process to look at the projects that we need that are to support the growth of the district, as opposed to upgrading of infrastructure. So assessments are made, and the likes of Mark Rikers and Andrew Maisie and Murray England will go through and look at what is pure growth driven and what is service level and make an estimation. It purely is an estimation at that point in time, and it's reflecting the project costs, and then we divvy it out across the population that's going to come in through growth. Regarding price escalations, so we don't update the project list every year unless we do an amendment to the LTP. But what we do have is provision around the PPI construction input price to be factored into the DC amount every year. And so we discussed that, I think, at the last council meeting, which moved around 8%. And so we have an 8% uplift in our DCs for the year. It is a real difficult one because developers are being charged the rate at the point in time that they lodge their consents, as opposed to necessarily when they undertake the development. So we do get some mismatches, which becomes a challenge to manage.
I'll just add to that one, particularly around Prebbleton with the plan changes, there have been some pausing thinking about how big this needs to be to handle the new developments as well. But as Calvin pointed out, it's all growth related, and at the end of that, we'll pull back on those DCs, which can be amended in the future review. So that's one of those problematic things. Things happening at pace with both water and wastewater in the Prebbleton area.
Murray.
You're making a head of this, sorry. Just thinking, going back to the conversation around budgets and the constraints, Craig's articulated them really well about having to report to LTP or whatever is the budget. Just think this cropped up almost on a regular basis, questions about over budget and SAC, forgetting, of course, that we'd approved unplanned maintenance. So whether there's some way that we can have a reference, an asterisk or something that just says council approved expenditure of X amount, on the date or something. It might be as simple as putting that in there so that it reminds those of us who, aren't sitting around this forum perhaps, that is a consistent message going forward that yes, the original budget was X number of millions, but we found, reference back SAC, we found this when we got into the build, that there was issues with the original building and we had to approve extra budget, and that's referenced there. So I don't know if that's easy to do, Craig, under the program, but yeah, it may negate some of those issues.
Yep. And the biggest problem or task that I've got is tracking down some of the approvals.
Yes.
I only find out in hindsight that there's actually been something else approved.
Just ask me, I'll make something up.
Yeah. Okay.
Yeah, it's sort of related, but it's about risk and liability. I went to a meeting at Horata a couple of weeks ago because we're closing a course for the horse jumps and such like, and it came up at that meeting by a lot of people afterwards. Why are we so worried about this when we've got skateboard parks? This is the part that I wanted to talk about. If you go to a lot of our skateboard parks, you can walk up to an edge and there's an 8-foot drop straight down with no rails or anything. So what is our liability in some of these things? I mean, when you're building a house, you can't have a doorstep more than 200 mil, but we can have a 8-foot drop or something straight off the bank. How does that work as far as liability goes for council? Because we've talked about in playgrounds, we've taken a lot of stuff out of playgrounds because they haven't complied. And I'm not trying to do away with skateboard parks, but it's when they're liability.
By making sure, Bob, that they're built to national standard, that they're subject to regular audit. So a number of Denise's facilities, for example, the aquatics are subject to annual audit. Playgrounds are subject to annual audit as well. And are we operating in a proper manner with appropriate signage?
Yeah, it's just that I was just thinking, like when we walked through the town centre, I had 3 or 4 of us, and the chap that was there that was walking around with us said, "Don't go near the edge, you could fall over." There's no difference between that and me going there when it's open. And one of the things is, is there enough signage for that type of thing to cover us? it's come up quite a bit in the community lately.
Yeah, well, my personal view is yes, there is. There's always responsibility of users as well. You know, for example, I wouldn't jump on a skateboard and go there, and if I did, I'm going to fall off and hurt myself, and that's my fault because I shouldn't be there in the first place.
And digressing, but that was the argument at Horata about the course, that they're riding their horse and it's their responsibility if they fall over. But my one was that the fact is that there's other people on the course that could get hurt, which was my main problem. So,
taken all reasonable steps.
yeah.
To keep people safe, and that's where you identify hazards. And if you have near misreporting, but if you know, I mean, people are not very good at, the public are not very good at kind of reporting near misreporting, but if they do, you know, we need to make sure that they've got a way of tracking that and identifying that and remediating it. Shane.
Thank you. And just quickly for me, thanks very much, Craig, for your reports. And I guess about very really for the savings you've made on one of the particular projects. I think it's deserves commendation, definitely. And I guess just reflecting on some of the comments around the table, what was key, I guess, is the political nuance within decisions that we make, especially long-term plans and annual plans and that type of thing. And I guess the concerning thing is that a long-term plan is outdated by the time the comment around that, by the time we sign it. So we know that and how we're planning for that. And I think the discussions we've had today are moving towards that. In particular, the projects really should be living documents with LTPs, and at the bottom of that, like a note, should be your CPI and your PPI increases over that period of time. So then I could see frustration in trying to work to an outdated document, given budget forecasts and increasing costs that are going up all around you. So surely, these documents are living, they should be all the time on supply chain and inflationary risks. So that's really sort of thoughts for me going into the future around that. So thank you.
That's a good point, Shane. It is a forecast, so it's not going to be precise. We can only really estimate. We have the further you're out on an LTP, the greater the forecast risk there is, because you're putting together projects which are largely concepts. We're not going to have done detailed designs on things, therefore we can't hone in on the exact price. We do include an assumption in our CPI, which you'll sign off as a council, but we are in an abnormal situation where we've come from a long period of stable CPI to a very buoyant CPI over a very short period of time.
Yes, thanks, Calvin. I guess I'm just on the back of that when we're busy trying to keep rates down. Are those figures based in commercial reality moving into the future? So perhaps into the future, the transparency of the commercial reality of these projects needs to be clearly explained to everyone.
I think you're correct to agree. I think that in the future there will be greater focus on ensuring that projects that are put up for LTP have been through a process which ensures that the scope and the costs are better prepared before you approve them at the LTP process. Council have been in a really good financial position. It hasn't had to put a lot of effort into prioritising projects, which it should really do in terms of a robust process.
Sorry. Just in regards to the financial reporting on major projects, and this came up from our council meeting with regards to minor projects, I guess, or other projects that could be considered major projects. And I think it was Councillor Alexander brought the issue to our attention that we had approved a project. Unfortunately, it was probably our fault that we didn't monitor that project, and it dropped off the project list without any understanding of how it happened. Is there a possibility of being able to monitor a list of other projects that we have in our LTP through this process?
Maybe I can answer that.
mentioned as the recommendations of council.
So that will come forward on the council chair.
You just further to that, Deborah, to me, that it seems that often we'll make a governance decision. What we're often not particularly clear about asking is also the by whom, when. And I think that's equally important. So whatever reporting process comes back, David, I think that's got to be clear as well, because where we got caught out particularly there is that we had a when. We thought we had a by whom in our heads, but in fact neither were met, and then we lost a budget as well. So it's something that we can learn from. It's no good relitigating that now, but I think it's important that the lesson from that is that we have a clear process going forward that can be monitored as well. So thanks for raising it.
All good points, and that is something that we are doing internally to create good work programs and plans that collectively is a part of the change around that David's put through around how we operate to lift executive up. Will be focused on that. The one thing to also be mindful of is the additional things that get added to that list, and therefore what comes off, or how do we resource and move forward on that so that we're not getting in those scenarios.
I think the important part of that, though, is that is a clear decision, and that it's noted, and that if we drop something off, we've had that conversation, and there's a record of that having taken place. And I think that's the difficulty, particularly around the governance table, Calvin, is that if you feel that hasn't been a discussion, and rightly or wrongly, and it's just disappeared, that's when the angst happens, I think. Certainly from the community, and we'll hear about it. But that's not a conversation for now. There's a process. I'm sure we'll hear about that.
No other comments. My final point, just as kind of listening to those comments, is that this will probably be, and without stealing the thunder of my report, state of play report for our next HUI, for me in the project space and project reporting is where we've made the most dramatic shift, to have one project dashboard where we've got the same metrics and measures for every single project. It's a good looking report, and if we do, incoming elected members to be able to get a kind of current state of each project looks great. And even looking at that front picture, I must say, and when we look around the quality, because we are reporting on time, cost, quality and health and safety. The barbecue talk, it's not barbecue weather, but the water cooler talk in Christchurch is that turf. Everyone in the city is talking about, have you been out to the new turf? Because, it's when you talk about quality and leaving a legacy, it's a very successful project. So much high that I sit on Christchurch Boys High and they want to come out and have a look. So put them in touch with Calvin. So a lot to be proud of. And I know, but we never want to become complacent, and especially because major projects is something that, we live and breathe as part of management's role and part of our oversight role. And we're always looking for continuous improvement. So, that's why it's very exciting to have Jenny and her role around program and project discipline. And there's still, more work to be done around budgets, contingencies, how we can be telling the story even better. And where I was thinking, and I will stop talking in a minute, is that, you started off, Craig, by saying we've delivered, what's the number? How many projects? 19 major projects with that spend. So imagine what this dashboard and the information in this dashboard will look like, and our PIRs in 3 or 4 years' time. So in our next election, we'll actually be able to take all that data from all of our dashboards and say, yes, we've had 19 projects, and these are the metrics, and these are our PIR results over. We've had this many that were delivered on time, on budget, to quality. So we'll be able to tell an even better story. So we're kind of setting up for future. Enough from me, but lots to be proud about in this project space. So well done. It's great. So nothing more from me. If I can have someone move the major projects report. Thank you, Bob and Nicole. Second. All those in favour? PIR, Jenny.
Warm down.
Something we sent a copy of the same, which please.
It's already working.
Oh, sorry. First timer on the front seat. And it's good afternoon now. So what I'd like to do with this, before I introduce the PI, is maybe just take you back through the process that we go through as we're creating this, just to refresh on that. I'm just conscious that the last one we did with you was probably back in sort of February, March. And just looking at the PIRs, what we're looking to understand is, yes, how well the project achieved its outcomes, but what are the key learnings we can take from that experience and apply to our future initiatives? And the sort of key aspects that we're looking at when we do that is, firstly, as I discussed earlier, the outcomes and how we achieve time, cost, scope, quality, benefits, compliance. Stakeholder satisfaction, so that's our ways of working, as well as what the end product has created and that experience. And also what we learned from the experience and how we can make our future projects even more successful. And that's looking at not just changes that we need to make, but what are the things that went really well that we just need to continue and keep doing. So when we go through the PIR process, we're looking for the big rocks and the big things that come out of all the discussions. So we're not digging into the detail of absolutely everything, but some of the PIR results may recommend deeper dives into particular aspects if we feel as though that needs to be looked at a bit closer. And also centralising the review process allows us to see trends across our projects and also ensure if we've got any sort of systematic issues or opportunities to take advantage of, we can see that from across the spectrum. So the process that we go through, I say we, because Craig supported me through this process, is that we do a desktop review. So we'll be looking at artefacts, reports, all that type of stuff. We have stakeholder discussions, which is a key element of it. So for this one, we spoke with about 14 people through this process of internal stakeholders from across the spectrum, project operations, regulatory compliance team members who contributed, as well as if they're open to, and we have had them, external organisations that have worked with us, so our building teams, and in this case we've also Canterbury District Health Board agreed to participate in this particular process. And once we've done all that, we get all the information and we'll play that back to the people who have participated, just sense check that. That will then go to ELT for presentation. We then bring it to this forum. So that's the process that this work goes through. In terms of the health hub, I think the opening narrative for this, it's a great example of council's ability to embrace a vision for the community, translate it into a compelling commercial proposition. And I'm going to say, make it happen for Selwyn. I mean, it's really been a great outcome in terms of that. There's no doubt we've created something of real value for the community and through its location, the greater Canterbury region. And the other element of this is that we've also started our commercial portfolio. So there's a number of key, achievements that we've had through going through this process that should be acknowledged and celebrated. I think contextually, when you look at this particular PIR, there's quite a lot going on. And there's a number of what I'd call firsts that our organisation is going through as we're doing this project as well. So it's our first commercial build of this nature. We're managing multiple commercial tenants in a single building, various fit-out scenarios. So it's actually quite complex. It's our first time working in an environment probably with the 24/7 services, and especially with health services, there's a heightened, can't you think of the word, but thing around that. And also when you put into the mix, there's a number of numerous major projects in flight at the same time. So as you know, we were doing the Health Hub, we've been doing Tiara at the same time, so in the Sports Centre. So our organisation is going through quite a big growth journey. So I think it's also important to acknowledge staff and external contractors' role in taking this vision and making it happen and making it this living, breathing thing that we see over the road today. The construction went well. Working in partnership with a number of delivery partners, the construction aspects of the project enjoyed actually a really productive and collaborative working culture. It was delivered within budget and trending positively now towards ROI targets, knowing that we still have a number of tenants to fill the building, but it's progressing positively. With the construction, we've learned some lessons along the way, as you would imagine, and it will help us create, the learnings it can take for that will help us with better take those learnings for our future projects. The learnings in that space, they're not major, or that I'd say it's the things that will just help us deliver things more smoothly along the way. It's very similar. Actually, you could take Southern Sports Centre and the Health Hub, and they're actually very similar in their aspects. And we're talking about frameworks, documentation, methodologies, sequencing of our delivery processes. So early indications from our PIR so far is that where we, and looking at the Southern Sports Centre and some of our other projects, we appear to be really strong in responding to a call for, the call to action as an organisation and making these buildings and offerings happen. So where we appear to be a little less purposeful and planned is around actually what we do with the asset once we've created it. And that sometimes this can become problematic for us operationally. So what I use the word TOM, but when I refer to it as a target operating model. So it's very similar to Southern Sports Centre. The lack of doing the target operating model up front was a feature of that, but it's also a little bit more prominent with the Health Hub due to the end use of the building and the complexity of the arrangements that we have in there and multiple external parties being involved. There are some areas we need to address to reduce potential risk areas for us as an organisation and more in our operations, which management are actively working on, and that's more around ownership, making sure the target operating model is fit for purpose, and we have the skills that we need to manage a facility of that type. So we've lost some IP with recent staff departures, which will go into my next thing. That's because we tend to have individuals leading some of our work, and we have the IP in the person, not necessarily in our plans and strategies. There seems to be an appetite for evaluating other commercial opportunities, which is actually really exciting. We do have an outdated and commercial strategy. And that's something that there's an opportunity for us to refresh that and get really purposeful around the commercial opportunities that we want to pursue, and that's right to pursue for Southern District Council and our community. From a health and safety perspective, because I know I've called this out in this report, the reason I've called this out is the health and safety itself is actually really well managed. I mean, and although this is their bread and butter, they do this, they're very well organised, they have very good systems, and there's no concerns on that space. But for us, it's more about what I'd call belts and braces. It's just making sure that we have our records and our documentation in a place that we can easily access. In this situation, we, relying on our partner to help project managers, they had the information, it wasn't necessarily in our system. So it's an opportunity for us to tighten up in that space. And I'm also conscious that's an area that's actually currently being worked on by our health and safety team. So looking at how could we be even more effective in the future, I'll pick up three things. One is to refresh our commercial strategy and have a clear link to the capabilities we need to support it. Understanding that our capital projects require an adjustment in our operating model, and standing up an operational work stream for the major capital projects we've done, and we're currently doing that in one of our other projects at the moment with leasing, and continue to reflect on our learnings and integrate these into future projects. We do some stuff really well, we have opportunities to improve, and it's just making sure that we can continue to learn and grow from that. And Murray, hope I didn't ramble too long.
Yeah, thanks, Jenny. Look, I've really enjoyed this report and the format that you've got to, and I'm particularly interested in you. I was hoping you were going to speak to it. You've spoken to essentially your last 2 pages, page 60, 61, about what do we learn from this and what's the strategy going forward. And I just went and had what was going to be a brief conversation with Denise this morning, and it took up the best part of an hour of the time. And largely the conversation was around this process going forward. And I'm really heartened by the way that, you used the phrase, we make it happen. And yes, we make it happen, but sometimes we've got to be really clear. And, your first point here is what are our aspirations and goals? And I think that setting that scene is really important. What are we trying to achieve? And then what do we measure that success with? And you've spoken to that. And I think that's a different approach than we might have had in the past, and about one delivering a result, but what is that result that we're looking for is really, really crucial. So thinking of the projects we've got coming up, this is a really important document for us, and this process here to me seems like a really important process going forward. So I'm really heartened by this, and obviously, we see Health Hub as certainly from the government's perspective, we see that as a massive success. It's covered with social and economic. And as Denise said, you can quantify in monetary terms what a social outcome is as well. And I think that's important to be captured when we're making those decisions. What is the cost benefit ratio? And we can do that as a social cost benefit ratio as well, and put a monetary figure on it. So, really commend you on your report, and it was really good reading. Thank you.
Shane.
Yes, kia ora. Thank you very much, Jenny. Much along the same vein as Councillor Lemon, I think it's an outstanding example of something done really well and really right, that ticks the social economic. But I believe it's I don't know how you would quite measure it, but also the cultural. It has a cultural name, it has a cultural presence, and being contributed to through mana whenua, so tēnā koutou katoa. I guess I would like to make a mention through the delivery to Douglas Marshall. He's out here in the room. He takes a fair chunk of that accolade, and through the responsibility of delivering an outstanding example of a commercial investment, as you say. So I'm really heartened to hear Jenny, you mentioned an opportunity to refresh the commercial investment strategy and the opportunities that flow from that. And I believe, obviously, that work will be in progress. So it'll be good to, support that from what I'm saying now, because I think this is an exciting example of the future for our district and the opportunities that flow from that. So giving you a report, and thank you very much.
Thanks for this report. So it's good to see that you've talked about the commercial investment strategy. It's clearly one that we've been asking for a little while, is with having a relook at that. So that's really given an impetus to go forward with that, which presumably will be a topic for the next council to look at. Just a query around this tenancy uptake is taking longer than anticipated. I'm not sure if that's something we discuss now, or whether it's something the public excluded concerns.
Probably the later.
Yeah, that's right. Thank you.
Thanks, Jenny. A few things from me. You may have heard that I love dashboards. So I think I saw an earlier version of this. So yeah, it's great. Looks fantastic. I guess the next thing is to make sure the content within is telling the right story, telling us enough that we need to know. Because similar to Craig, it's you have a beautiful dashboard and then you run out of room and you're like, should we be telling them a little bit more? But I don't want to upset my beautiful dashboard. Because yes, I completely agree with you, Shane, and I actually think a measure of the PIR should be cultural. But remembering the role that Jenny is playing, is that she's coming in at the end of a project and looking back And her baseline document that she should be starting with, or she will be starting, is the business case. Right. So if the business case hasn't been written well, or the benefits in the business case haven't been defined, it's very hard for Jenny to come in at the end and go, what did you say you were going to do? What was the scope? What was the purpose? Like even that background and purpose that should be from the business case. So, what were we trying to deliver? What time frame did we think we were going to achieve it for? When you're writing a business case, you may or may not have an indication of budget, but definitely around the benefit. Those benefits should be defined in the business case. So for me, the two areas of, I guess, because we're always trying to continuously improve, is definitely around the benefits realisation, because at the moment, I've seen a lot of PIRs and I've seen a lot of benefit realisations piece of work, and they could almost be another whole report, and I'm meaning a pretty fat report, because you'll say, well, in the business case, we said for this asset, yes, we're going to provide community good, but we were, you can actually have tangible KPIs in there. So for this example, it might be that, I don't know, in the first 12 months, we've had this many residents that have not had to travel into Christchurch. They used to travel into Christchurch, and now this many residents, as one tangible KPI. Yeah. We've managed to offer this many employment opportunities to local residents that are now working in their neighbourhood. So, it's quite high level in that space. So that when I look at that, the other ones are quite tangible and quite easy, because, did we deliver it on time? What was the budget, scope, and health and safety I'll come to. But in that community good space, I think that's really where we could. But you got to rely on what's in the business case, and you've come in afterwards. So it's almost like whether you need a role in that business case, or whoever's writing the business case need to understand what you're going to be coming into. I mean, if they understand what a good business case is, then that should kind of be black and white anyway. So that's one thing. Health and safety, fairly generic measures, and that's not too much more there. I guess it would be, and you did reflect on working with the team over that. The incident count, 53, no major. So I guess we can, the indication that there's been no work site visits kind of indicates that there's been no notifiable events. Yeah. But yeah, interesting to just keep working on that column. Just to see whether there's anything else that, because until we do a few of these, we're not going to know. So for me, of a project of that size, that spend, that many kaimahi on site delivering it in that time frame, is 53 a good number? I've got no idea. Yeah. So that's the kind of again thinking about telling that story, because no one around here is looking at that 53 and going, is that good? Is that bad? But other than that, love the dashboard. So well done. It's great to have you here.
So just take another bite at that. Really great points, Lisa. Thank you very much. Just a question around ROI. There's no current policy on when to sell or realise that asset value, but when will that be? And when will that work begin? And I want to say why hasn't it? But yes, when.
Sorry, Shane, what's the question on when?
Comment on the delivered return on investment is based on an estimated selling value. There's no current policy on when to sell or realise the asset value.
No, and we wouldn't write a policy on specifying when to sell. That's a continual review of assets to evaluate whether there is a market to sell or not, similar to some of our other investments that we're continually reviewing those and assessing and making that point. I think what we would, the approach that's been taken in determining that ROI is one approach, with looking at what was sale value. The other would be a terminal value we'd put in, which is a earnings over a period of time less cost for X period, which would be a terminal value, which we'd put in there. So it's sort of a capital finance thing.
Yes. Yeah. Yes. Thank you.
I think the key point of the discussion here around business cases, it's governance group asking for more in that regard, because I'm not sure to what extent there was a business case
As a commercial investment, that's what was around return on investment.
So Annalise's points are great and really stuff that we'll take on board, and Jenny's doing a lot of work around that business case preparation, project management, portfolio management, which is all a lot of enhancements to what we were as a small council where we could manage things on an individual basis to being a much larger council where we have to be a lot more professional in what we're dealing with because we have a much larger portfolios to deal with.
Thanks, Calvin. I guess my question wasn't so much around selling the asset, it was just around return of investment or dividend as a commercial investment that does what it's faced with. Is that return go to?
At this point, it's heading back in through our general rate space because of the way the investments go. But we'll also be looking at what do we want to recycle into a wider investment portfolio.
Thank you.
Yep.
Right. No further question. Have someone move. Thank you, Murray. Seconder, Nicole. All those in favour. Thank you very much. Right. Council resolution to move into PX. Thank you, Murray. Thank you, Nicole. All those in favour.
Stay.
Okay. Actually,